Okay, let's get into this. We often think translating software is pretty simple, right? Just swap the words. But imagine you're translating something like accounting software into German. Suddenly, it's not just about language anymore. It's about the law.
That's absolutely the core issue here. What looks like one language, German, is actually, in the financial world, at least 5 different legal and tax zones.
Yeah.
If you localize for Germany, say DDE, and then try to sell that same software in Switzerland, well, you've basically sold them something non-compliant.
Right. So for our deep dive today, we're looking at some internal localization documents from the osFinancials TurboCASH accounting software. And our goal is really to see just how deep this localization rabbit hole goes. It's way beyond a dictionary, looking at specific financial laws, technical terms.
Yeah, and what's immediately striking from these sources is just the geography of it, even within German. They require separate versions, obviously, for Germany, DDE, and Austria, DAT, that makes sense. But they also specifically call out Belgium for the German-speaking part, DBE. And they flag Liechtenstein, DLI, and Luxembourg, DLU, as really important, especially Lux, being trilingual.
Wow. Okay, so right off the bat, you're juggling 5 German variants, not just language, but terminology, tax rules, legal standards.
Exactly. They might speak German, but their financial rule books, fundamentally different.
Okay, so let's talk about that, the nuances in these sort of German accounting dialects.
Well, first thing we need to clarify is the difference between, say, a regional dialect like Bavarian and the specific legal jargon. The localization rules in these documents, they're crystal clear. You must use standard High German, Hochdeutsch, for everything official. UI, financial statements, all of it. For clarity, for legal reasons. Nobody's writing their official balance sheet in, Swiss German slang.
So the language is standardized, Hochdeutsch. But the actual meaning of financial terms, the jargon, that changes depending on the country's legal system.
Precisely. And that's because the generally accepted accounting principles, the GAAP, are different. Just compare Germany and Switzerland, their whole accounting backbone. Completely different structures.
So for an accountant in Germany, what's the sort of ultimate rule book?
In Germany, it's all about the Handelsgesetzbuch, the HGB. That's the German commercial code. It's the foundation. It emphasizes prudence, links very closely to tax law. If you're filing statutory accounts in Germany, the HGB is absolutely mandatory.
Okay. And Switzerland? They're not in the EU, so they use something else entirely.
That's right. Switzerland uses the Obligationrecht, the Swiss Code of Obligations, or OR. It's actually a much leaner framework compared to the HGB. Often companies supplement it with standards like Swiss GAAP FER, but the key thing is the terms, the definitions, how you recognize revenue or expenses under OR. It's just not directly compatible with HGB language.
And all this legal stuff, HGB or OR, it feeds directly into how the accounting software itself is structured, like the chart of accounts.
Exactly. The chart of accounts, or COA, is the engine room. So the localization documents put huge emphasis on getting the German COA templates right. These are called standardisierte Kontorahmen, SKR templates. And the 2 big ones you absolutely have to support are SKR03 and SKR4.
Ah, yes. SKR03 and SKR04. We hear those a lot in German business contexts. What's the practical difference for a user setting up the software? Why choose one?
Well, SKR03 is generally seen as process-oriented. It aligns with the total cost accounting method, so it's popular with smaller and medium businesses. SKR04, on the other hand, is more balance sheet-oriented. It fits the cost of sales method better, often preferred by larger companies. But here's the critical part. If a company legally needs the reporting structure of SKR04, but they mistakenly configure the software with SKR03, they might actually break their ability to generate legally required reports. It's not just preference, it's a compliance choice.
Got it. Okay, moving on. This next point about the word batch sounds like where things really got tangled up in translation.
Oh, absolutely. This is a fantastic example. According to the source notes, the single English word caused huge confusion. It apparently held up development for nearly 3 weeks because they were trying to force one German word to fit everywhere. Eventually, they realized they had to split the meaning.
Split it how?
Yeah.
What was the context difference?
It was about mixing up finance and logistics. When you're talking about financial processing, like posting a group of transactions together, a batch posting, or specifying a batch type, the rule became clear: batch must translate to journal. So journal type was chosen over the more literal stapler batch type. It's about clarity for accountants.
So it's not really about the word itself, but its function. Is it hitting the general ledger?
Exactly. But then if you're using the software for inventory, for logistics tracking, physical stock, production runs, expiry dates, then batch must be translated as charge. So a description like batch bought from supplier has to become something like Anlieferanten verkaufte charge. Same English word, batch, but two totally different, non-interchangeable German terms depending on whether you're in the finance module or the inventory module.
That level of precision must apply to core accounting concepts, too, like managing receivables.
Absolutely. Take open item management, basically tracking who owes you money and who you owe until it's settled. The localization demands the German term Offenpostenverwaltung be used consistently everywhere. Every label, every screen related to it, like label ID 2034, open item selection becomes Offenposten Auswahl. No variations allowed.
So we go from these big legal frameworks right down to the nitty-gritty of the user interface. Button labels, menu paths.
Yes, and this stuff seems small, but it's crucial for usability. For instance, the rule was use the infinitive form of the verb for action buttons. So abbrechen to cancel, not the noun abruf, cancellation, or löschen to delete, not lösch, deletion, consistency. And path translations needed to be exact, like set up company info had to translate precisely to Einstellungen Firmen information.
And German's famous for those long compound words. How do they fit on a button or in a narrow column?
They often don't, so the localization team had to be quite aggressive with abbreviations. A word like Rechnungsnummer, invoice number, is just too long for a standard table view. The documents show they systematically shortened it to things like Rechnungsnehmer, or even just Nehner in really tight spots. It's a practical compromise, to keep the software usable, especially on smaller screens.
Makes sense. Okay, let's switch gears to taxes. This feels like where the compliance risks really ramp up. VAT, value-added tax. Same idea everywhere, but the details differ wildly.
Dramatically. Even the name is different. In Germany, the required term is Umsatzsteuer, and its abbreviation, USA, must be used consistently in the software reports, UI, everywhere.
Yeah.
But jump over to Switzerland, and the system has to switch entirely. The primary term there is Mehrwertsteuer, and the abbreviation is MWST. You cannot mix these up.
And the software needs the actual tax rates hard-coded based on the country selected during setup, doesn't it?
Absolutely critical. You're dealing with totally different tax authorities and rules. Germany, being in the EU, has a standard rate of 19%, reduced rate of 7%. Switzerland, non-EU, has its own rates. Standard is 8.1% now since 2024. Reduced is 2.6% for essentials like food and books. Then you throw in somewhere like Belgium, also EU, but with a 21% standard rate. The moment the user selects Austria or Germany or Switzerland, the correct COA and the correct tax codes and rates must load automatically.
And this legal difference shows up strongly in the jargon for cross-border stuff too, especially within the EU.
Yes, that's a really key area. If a German company buys goods from, say, France, another EU country, the software needs to correctly label that transaction. The specific German term is Innergemeinschaftlicher Erwerb, which translates to intra-community acquisition. And crucially, this needs specific accounts set up within the chart of account structure.
But Switzerland, being outside the EU VAT system, has a different way of handling things, like imported services.
Right. And this is where the terminology divergence is vital. For services bought from abroad, Switzerland uses the term Bezugssteuer, which is an acquisition tax. These terms, Innergemeinschaftlicher Erwerb and Bezugssteuer, are not synonyms. They represent distinct legal concepts under different tax regimes. They need separate handling, separate accounts in the COA to make sure the right tax gets reported to the right government.
Wow. And that consistency has to follow all the way through, even to the name of the final tax report.
Exactly. The instructions were very clear. For German users, the report must be labeled UST Bericht, VAT report, using that specific technical UST abbreviation consistently. Honestly, localizing financial software like this is basically performing a deep audit of tax and legal parameters for each specific country.
So wrapping this up, what's the big takeaway for you, for the listener? It seems like translating financial software into German isn't really a language job at all.
Not primarily, no. It's fundamentally a technical compliance and legal auditing task. You have this high standard for the language itself, Hochdeutsch. But layered underneath that are these completely different country-specific financial laws and practices. HGB versus OR, SKR03 versus SKR04, UST versus MWST. You have to get all of that right.
And navigating that complexity allows for something quite powerful for businesses operating internationally.
Yes, exactly. One feature highlighted in the sources is really crucial: the software's ability to manage preferred languages for external documents.
What does that mean in practice? Like a company in Austria using the strict Austrian-German setup internally, they can still print an invoice for a supplier in Italy, say, in Italian.
Precisely that. Internally, everything stays compliant with Austrian law, in German, DEAT. But the documents they send out, quotes, invoices, purchase orders, can be generated in the language preferred by the customer or supplier. That linguistic flexibility is huge. I mean, your internal legal compliance doesn't have to create communication barriers externally.
That is a really powerful feature. Makes total sense. Thank you.
And maybe just one final thought to leave you with. Think about the sheer depth of this localization we've discussed.
Oh.
The specific legal codes like HGB or OR, the mandatory COA templates like SKR 0304, the hard-coded tax rates in terms like UST or MWST. Now, what do you think are the real-world financial risks, the pitfalls for a company that doesn't do this? What if they just rely on a basic dictionary translation without checking any of these local German accounting standards? The consequences go way beyond just confusing UI. You're potentially looking at serious compliance failures, fines, maybe even insolvency.